Hello, I'm Sue Baggerly talking with Matt Plooster, the co-founder and managing director of Bridgepoint Investment Banking. So Matt, give us some background about you and about Bridgepoint Investment Banking.
Yeah, we founded Bridgepoint coming out of the crisis on Wall Street, and about a decade or so ago, we were trained and working at large investment banks, Goldman Sachs, Morgan Stanley, Deutsche Bank, et cetera. And that time in history gave us a real opportunity to look around and say, what kind of work do we want to be doing? Where can we have the most impact? Who are people that really need help? And so we moved back to the Midwest in 2010 and founded Bridgepoint, really with the idea that there was a huge underserved market here in the Midwest.
What is impact investment banking, and how is that different from other investment banks in the U.S.?
We founded Bridgepoint as an impact investment bank. For us, that's really about three things: our clients, our people here at Bridgepoint, and our communities. As it relates to our clients, we want to work for clients that can have an impact. And so one example of that could be the $60 million capital raise we're doing for a sustainable ag company that we think could have a real impact on hunger and on food. But it also could be selling a company that is a major employer in a small town in Nebraska or Iowa, and the impact that could have on that town. Our people, we're very passionate about creating givers amongst our employees and them having an impact with their time and resources as well. And then our communities, we have a major initiative about giving back and using the profit from our firm to have a real impact on society.
Well, tell us about your clients. What types of companies do they own, and what corporate financial goals do you help them achieve?
Our clients are mostly private companies. We really focus on the space, companies that generate cash flow or EBITDA between $3 million and call it $30 million. An average deal for us is probably $50 million. But more important than the dollars for us is really how much impact can you have, and are you the right firm to help that client? And so for us, it's not one size fits all. That's really what makes us different. Most investment bankers really want to sell your company and say, call me when you're ready for me to sell it. We do the opposite. When somebody calls us and says, hey, sell my company, we back up and say, what are you really wanting to achieve? Are you saying you want to sell? Are you saying you want money or succession? Those types of things. We tailor every solution, whether it's capital raise or M&A or somewhere in between, to every single client or prospect's facts and circumstances.
Well, explain what these services might involve.
Sure. It really spans the spectrum of M&A and capital raise solutions. So on the capital side, it's across the capital structure spectrum, from 100% debt deals to 100% equity deals and everything in between. Our 20 or so investment bankers here at Bridgepoint are on the phone every day with the money centers, and we really do have a group of trained and skilled leverage finance bankers, which we don't find at this end of the market, and that really allows us to tailor solutions to each prospective client's goals and priorities. And then on the M&A side, it's mostly sell-side M&A, but also some buy-side M&A.
What are people most surprised to find out when looking for ways to raise capital?
I think people are most surprised by the number of options that do exist. In markets like the Midwest, generally company owners manage their capital options to what their commercial banker tells them they can do, which is really constrained by their collateral. And the truth is, there's a big world of capital out there that most folks in the middle market aren't aware exists. And so our clients are quite often surprised by how many options there are that were different than what they thought were possible.
Well, the options that you're talking about deal with debt, which can have a negative connotation. But it seems that the solutions you're highlighting can have an extremely positive outcome for your clients. So how is that?
Yeah, the reality is capital is a spectrum. When most people think about debt, they probably think about bank debt, which sounds great, and everybody's focused on interest rate, and it's cheap, 4 to 5% type of cost of capital. But the fine print says they want your personal guarantee, they want their money back quickly, and they probably don't want to give you a lot of it. On the other end, you have equity, which is probably 30+% type of capital, but then you have to have somebody telling you how to run your company. And there's a spectrum of capital in between that can allow you to keep your company, but eliminate your personal guarantee, actually use it for things like personal liquidity and or additional growth capital. And yeah, it might be a little bit more expensive, but it might be the right solution relative to equity or debt on the ends of the spectrum.
How can Bridgepoint help a client get the most from a transaction of this nature?
the most important benefit is making sure that they're doing the right transaction. We see a lot of folks do transactions, sell their company, for example, because they think that's the only option they have. And so I think the first thing is making sure that you're pursuing the right type of transaction and are aware of the other transactions which you're not pursuing and why. And then beyond that, I think we're very different. We're Wall Street trained, but we also have Midwestern values, and we know how to speak Midwestern talk, not just Wall Street talk. That adds value for our clients. We're unconflicted and we're independent, and most importantly, we can be trusted. Our clients come back to us because of trust.
Well, Matt, thanks for talking to me about Bridgepoint and how you help your clients reach their financial goals.
You're welcome, Sue. Thanks for your time today.